So what exactly is the Bitcoin halving and why exactly will Bitcoin reach 100,000? Welcome back to another video. This time we're going to be talking about the Bitcoin rally and Bitcoin halving. So Bitcoin has been reaching 40,000, over 40,000 probably when this video is made. So it's very possible that Bitcoin will reach 100,000. And there's a very simple reason for this. The Bitcoin halving is in 135 days, which is absolutely amazing. But we also have another secret ingredient that Bitcoin halving happens every 4 years. Now, a lot of people are confused what Bitcoin halving actually is and what it does and why the price go up every time. Historically, Bitcoin has been larger and more worth than 4 years before, which is absolutely amazing. That's absolutely amazing. But what we need to know is the same thing happened 4 years ago. Everybody thought crypto won't go up, but it did. It did, and the news is talking about it. Just a few days ago, Bitcoin was 25% lower than it is now. So this is one of the biggest bull runs in crypto history, which is great. That's actually great news. We wanted to see this for some time, but let's talk about what happens next for Bitcoin. Now, Bitcoin is basically not infinite. There's 21,000 Bitcoins and there's still Bitcoins available in the market. So every time someone sends a transaction, it costs some Bitcoin to sell it. And the thing is, when mining Bitcoin, these huge miners spend a lot of electricity on mining these Bitcoins to get them to finish these transactions. So in about 135 days, it's going to give them less of a Bitcoin for every time they complete a task. So it's basically rewarding those who process these transactions because they cost a lot of energy. And that's where the secret Bitcoin trick is. A lot of these institutions actually bought Bitcoin this year. So before, not a single person can afford the full Bitcoin anymore. Like there's 21 million Bitcoin. So if the institutions buy 12 million, and also there's a lot of Bitcoin lost, basically no person will be able to afford a single Bitcoin or buy a single Bitcoin because the supply will be simply gone. And that's the big difference about it. And that's why the news is reporting, because when people buy a Bitcoin, they can't get a full Bitcoin anymore. They sure can get like $4,000. They can get a tenth of a Bitcoin. But one Bitcoin for one person is just a fantasy right now. And that's why really the prices are rising, because the supply is lowering and the demand is increasing. It's just a simple mathematic. And the institutions know this. And because ETFs are coming, they have to provide some Bitcoin when they have an ETF, which is absolutely incredible. So when people will buy crypto, they need to provide some backing with the ETFs. They need to say, yes, we hold that Bitcoin for you. So they're buying it now because otherwise it's going to get expensive later. Otherwise, when crypto gets listed, so they can get massive profits. So let's say someone buys a Bitcoin for 100,000, but they were already holding it for 20,000. If that's how I understand ETFs work, of course. But there's also mainstream media talking about it. The halving is going to be big and it's going to really change crypto forever. And just 3 years ago, Bitcoin was about 8,600. So if you want more content like this, smash that like button.
Everyone wants a piece. Bob Pisani joins us with a look at how people are trying to get in on the action. But first, let's begin with Kate Rooney for more on what's driving this rally. Kate?
Hey, Kelly. So it's been a lot of excitement around a Bitcoin ETF or a spot ETF. It would track the actual price of Bitcoin versus the futures price. There has been a lot of hype, a lot of speculation that the SEC is going to prove this. There's 9 or so applications out there from everyone from BlackRock to Fidelity. So the excitement here is around the biggest asset managers in the world getting involved. So it's seen as this stamp of legitimacy and stamp of approval, and then it would also theoretically expand access to cryptocurrencies, Bitcoin in particular. And then there's another dynamic. So that kind of lit the fuse, Kelly, and that's what got some of the price movements above 30,000, for example. But then there's another dynamic here, which is leverage. So especially in these markets in Asia, I'm told you get what amounts to sort of a short squeeze. People had bet against Bitcoin in this case. Then you see these massive liquidations and these massive positions get wiped out. That is most likely what we're seeing in the last couple weeks or so. You saw the price climbing to 40,000 and then just this massive spike to almost 45,000. So that is more likely one of these big, what you would call whales in these markets, liquidating a position versus just retail interest. So you saw about $90 million, for example, of liquidations yesterday alone. That indicates that it's some of the bigger institutional players in these markets versus retail interest, which has still been pretty muted. It's risen, in the last month or so, but it's still far below what we saw in the height of 2021 and even last year, Kelly.
Yeah.
All right. Thanks, Kate. Now, Bob, how do you see it?
Well, look, number one, there's no doubt that interest in a Bitcoin ETF is what's driving these right now up. Here's the problem. We have seen this phenomenon before. So, for example, companies going in the S&P 500, their prices often go up in anticipation they're going in. Whenever you have the idea that there might be an expansive new market, people tend to try to front run the price.
Uh-oh. Did I get cut off?
No, Mike, you're still here. We were going to have Tim Seymour jump in with a question, but there's something wrong with his audio. It's like gremlins here, Mike, with all these remotes that we're trying to work on. I wanted to ask you in terms of, Ethereum contracts started trading today, and I'm wondering if you are in that trade at all and what you see for some of the other cryptocurrencies aside from Bitcoin.
Listen, I have a smaller position in Ethereum, and I think, Bitcoin has this lane of store of value. And because of it, it's almost a finished product. There's nothing that has to happen for Bitcoin to get better. The other projects, Ethereum being the most promising and second biggest, really continue to need to develop the underlying technology so it's used more often. Right? Ethereum is right now used for decentralized finance. Mm-hmm. There's about a little less than $1 billion of DeFi or $600 million of DeFi on Ethereum. And all the stable coins have moved over there. So there's $9 billion of stable coins. And so that's a big deal. As the Ethereum project grows, I think the value will go up. But I don't think it's today's news. I think it will get dragged along with Bitcoin, but it won't accelerate on its own probably for a year or two until it really gets users on the platform. And that'll get valued more like Facebook. It'll be a social network. It'll be a network effect. The more programmers, the more coders, the more businesses built on it, the value will go up.
Okay. One quick question for the traders before I let you go, Mike. Show of hands, who wants Mike to shave his mustache off? Show of hands. No. Wow. No takers, Mike. You're going to keep that thing. Apparently, you're going to keep it.
My Gordon Liddy look.
Great to speak with you. Thanks so much for your time.
Thanks so much.
Mike Novogratz. Dan Nathan, what's your trade out of this?
Yeah, listen, that level of confidence, these guys have some history about how the Bitcoin is traded after the past halvings, and he seems pretty convicted that it's taking 10,000. Listen, it wasn't particularly uncorrelated to a lot of other risk assets when things were selling off earlier this year. So you really have to buy into the long-term case for this thing rather than a short-term hedge, in my opinion.
Just to think about it, this snippet was actually posted 3 years ago when Bitcoin was at 8,000 and they were saying it's a long-term game. And 8,000 to 46,000 during all the bear markets is absolutely incredible. That's outperforming any other asset. But if you guys want more content like this, seems like the simple explanation, what is Bitcoin halving, is that the current rewards will actually be reduced and give less rewards to these miners that earn a lot of profit and actually mine more Bitcoin. So there's still not 21 million Bitcoin out there, but that's a pretty awesome strategy overall. If you guys want more content, again, join me on my crypto journey.